The story of GameStop in the media is the story of David, a crowd of individuals who discovered the stock market in March 2020, against Goliath, the world's largest hedge funds, losing tens of billions of dollars to David. GameStop is the story of the crowd who decided to take revenge and rob the rich on their own turf. You've all heard about it. A small video game distribution company whose shares are really worth about $4 to $8, and it's trading today for $200 at the time of writing this after having gone up to over $450. I will explain it all in this video, but that is not the most important thing. In reality, what this story tells us is much deeper and much more important. It is an extremely strong convulsion of an economic system that has gone completely crazy and unhealthy because of the policies that govern us. Come on, let's go. First of all, from a technical point of view, here is the behavior of the GameStop action in only 1 week, 7 days. The stock has gone from $40, which is already 5 to 10 times its real price, to over $460 in a large number of terrifying convulsions. Compared to GameStop, investing in Bitcoin is like investing in a family man. This incredible graph, which will go down in the history of the stock market, shows the fight between the biggest hedge funds on the planet who bet on the stock against a crowd of several thousand, and some say several million, individuals who bet on the rise. In summary, in the logical functioning of markets, the price of a share must reflect its real price. Whether you are a speculator or a long-term investor, in the end, all strategies converge towards this objective of price evaluation. Hedge funds are no exception. They may try their hand at making money, but in the end, overall, they always try to rely on a reality because otherwise, they know they will end up losing. In the case of GameStop, the news is very bad for this retail chain that is running straight into bankruptcy. So hedge funds that understand that the $40 share is overvalued since the company is almost dead are looking to make money on its end of life, and they bet on the decline. One may find it immoral to make money on a company in bad health, but on the scale of the economic system, it makes sense. It's like sharks eating injured animals in the ocean. Sharks are cleaners, just like our hedge funds on GameStop. For the economic system, the interest of the bankruptcy of companies in poor health is to purge the system so that other companies can develop. From a moral point of view, this is cruel, but I want to point out to you that this has a global utility. We will come back to this in the second part of this video. Thus, on GameStop stock, there were massive short-selling positions from the largest hedge funds on the planet, the creme de la creme of world finance. On this, a massive crowd of individuals flocked to the GameStop stock to get it up. The idea is not to save GameStop, since I remind you that the stock market price, whether it's high or low over the last 7 days, does not bring one client more or less to this company. No, the objective is to ruin the speculators on the downside and take their money away from them. This strategy doesn't bother me at all because these kinds of low blows, so to speak, is completely part of the strategies of hedge funds or, more broadly speaking, of financial professionals. We're in the sprinkler, and I must admit that this part of the story where funds like Melvin or Citron melt away several tens of billions of dollars in a week is quite enjoyable. And true, no one likes Goliath, and when David puts a big cleat behind his ear, the crowd, and I for one, think it's a lot of fun to see. Besides, charismatic and popular figures like Elon Musk have helped fuel this madness. For Elon Musk, I understand why he has a grudge against hedge funds since Tesla was their target for a long time. In 2020, remember that Tesla overdraft sellers have lost tens of billions of dollars. For the occasion, Elon Musk made real red shorts on sale for $20 on the Tesla boutique. The message is clear. If you want Tesla shorts, here it is. In other words, go to hell. However, I don't find this attitude responsible because many individuals will end up ruined with these GameStop stories, no doubt about it. For the technique behind this majestic shakedown, you have to understand that to bet on a downside, you have to sell today and buy tomorrow. To do this, you borrow a share, you sell it, and then, say 10 days later, you buy it back and give it back to the person who lent it to you. In this case, if the price of the share has gone down, you make money. On the other hand, the mechanism implies that the short sellers, the down bettors, when they have triggered their bet, are obliged to buy the shares they have sold short to close their position. That's when our horde of private individuals rush to GameStop to buy everything and leave no way out. See, as a hedge fund, when you sold short at $50 and you see the stock explode at $100, $200, or $300, you're like a thirsty man in the desert. If you manage to close your position when the stock is at $200, you lose at least 4 times your initial bet. I say at least because often, professional traders use leverage to amplify their gains. But it also works for losses. In short, in principle, our horde of individuals will make a fortune on the backs of these hedge funds because, in theory, the last holders of the stocks will be the hedge funds that will be forced to redeem themselves at the highest level in order to get out. This is not at all the logic of a simple speculative bubble, where you are trying to push the stock up to sell it to the last sucker who is taking it in the teeth. Here, the objective is to target stocks with very large short positions in order to raise the price to new heights, and then make the short sellers drink the broth to act as the last sucker. The goal is to get rid of Wall Street's high finance. It's an organized gang robbery of the crowd against the billionaire of high finance. You have to admit that saying it like that sounds pretty cool. So what's the problem? This situation poses 2 major problems. The first one is technical, and it should dissuade you from following this movement. I am sure that among the mass of individuals who play this game, a certain amount will find themselves ruined. It's not possible to set this strategy so that it's the hedge funds that lose everything. They may or may not have already exited. We can't know that precisely. Moreover, this strategy is also based on the purchase of derivative options, with frightening volatility. In short, this is really Russian roulette. Some will become millionaires overnight, and maybe even billionaires because the amplitudes are so high, while others will be nuked. In short, it will all end very messy. The second reason is fundamental. Markets are losing their meaning and role. All this madness, because it is madness, is a direct consequence of the monetary policies of the Fed, the American Central Bank. For 20 years, and especially since the economic crisis of March 2020, the message sent by the monetary and political authorities has been the following: the economic crisis is for the people, and the stock market profits are for us. By printing money at every crisis to sweep the dust under the rug, the financial markets look more and more like a machine to make the rich richer, while the money of Mr. and Mrs. Everybody loses its value with every passing year. To put it another way, the stock bubble is for the hedge funds that make billions, and the real estate bubble that prevents young people from finding housing, and the 0% interest rates that ruin the savings of young people's parents is for the people. Obviously, people are not happy at all, and they are right. For these young people from the common people, as some think, they decided to pay the rich directly through the market. In my view, I see these phenomena as a revolt. These people want the skins of the rich, who were maintained and supported by the policies of the central bank. Finally, don't think that Gamestop is an isolated case. The same thing happened with less amplitude on Hertz, Signal, AMC Entertainment, American Airlines, and many others. The mechanics are starting to work well, and that's why the raid on GameStop worked so well. This is not an isolated case. So, what do you think about this? Today, there is no longer a free and honest market. Asset prices are driven by central banks, and this can only end badly. No matter how clever the central bankers are, and no matter how coercive our leaders are, all this madness will end in tragedy. I don't know how it will break down, but reality will take care of finding a catalyst for market collapse. No one imagined that crowds of private individuals would move from street demonstrations to market demonstrations to rob the rich. The world is changing, and it's changing very fast. Remember the speed of the March 2020 crash that brought the market to the floor in 3 weeks. The raids of crowds carried by this new wave of individuals who adapt very quickly to the new rules of the game should not make you forget that we live in crazy times where companies go bankrupt while the market goes up. So take care of yourself and take a step back. And on that note, I'll see you in the next video.
Thank you so much for watching. If you like my videos, please subscribe and don't forget to hit the bell if you want to be notified of the next episode. And if you want to invest in the stock market over the long term or diversify your financial portfolio, I'm offering you an analysis of the 8 European star stocks to have. Thanks again for watching and have a great day.